Hi, this is Mark from Altcoin Buzz, and today we're going to take a look at some of the candle chart patterns on Bitcoin in an attempt to, hopefully at the end, have you familiar with some of those patterns so that you can start looking for them on your own. So just to set the stage here a little bit, if you're a hodler, we've talked about this before, it doesn't matter. If you're just curious, fine, but otherwise there's no reason for you to watch this because you're just going to watch your coins go down to zero if they go down to zero and go up to 100,000 if they go up to 100,000. So it doesn't really matter. If you're going to make a comment in the bottom about how the coins are manipulated and it doesn't make any sense to look at TA, it doesn't make a difference, then I might argue with you that TA does make a difference. Yes, I believe the market is manipulated just like the traditional market is, and that even makes it more predictable in some sense. So my argument would be that the technical analysis does work even when the market is being manipulated. And if you're one of those that's going to make the comment that TA is just a bunch of hogwash because all we do is say it's going to go up, down, or sideways, then there's no reason for you to watch this either, because that is the essence of technical analysis, to see whether you're finding a trend reversal potentially, either in a direction that's up or down. And for those that choose to ignore technical analysis, you're probably just trading on emotion anyway. And the number one rule as a trader is not to let emotion get involved. TA is fact-based. It is data-based. And so at least from that standpoint, take away the manipulation and all of that. I mean, we'll look at some of how manipulation may or may not factor into Bitcoin. It at least takes away the emotional part of the trading and gives you a foundation to make decisions based off of that are not based on emotion. Because fundamentals right now from a Bitcoin and overall crypto standpoint are extremely positive, and yet we're in a very bear market. So the fundamentals at this point don't matter. They're not affecting the chart. If the fundamentals were affecting the charts, we would see another rally up into the $20,000 Bitcoin range, or $10,000 at least. But they're not factoring in. So at least TA gives us some fact-based or data-based information to look at and look at the markets objectively. One final piece is, after this is posted, for sure you're going to see a comment below about how somebody thought the TA was great and they found somebody that knew what they were doing and saved them so much money. They lost their Bitcoins and all of a sudden they made them all back. Those are not sponsored by us. Those are not endorsed by us. I don't believe in them. Altcoin Buzz doesn't believe in them. They show up on every single one of our videos and we do the best that we can to try and eliminate them, but they're just constantly spamming us. So just ignore those. I'm giving you free information to give yourself some knowledge base so that you can start doing all of this on your own, make your own Bitcoin profit instead of giving it to everybody else to advise you on how to do that. So now that all of that's out of the way, let's take a look at some of the basic candle patterns that we're going to then pull up on the current Bitcoin chart because they do apply today. Let's get into it. So let's look at some of the candlestick patterns right now, and I've outlined in green the ones that we're going to look at on the Bitcoin chart that we're looking at today, the active chart that we're looking at today. Starting with the cup and handle. Now the cup and handle is where you have price action coming up into a resistance area, rejecting that resistance, making a curved type of a price action pattern, hitting the resistance again, then doing some kind of consolidation or a slight downward channel to break out from that to the upside. The inverse of that would be coming down from price action into a support level, coming up off of it into a curvature type of a pattern, and then rejecting that support level, coming back up, and then the theoretical is you break back down. So that's the inverse cup and handle. We're looking at the inverse today. The head and shoulders pattern is a little different in the sense that it's not a curvature. It's a little bit more of a up-down type of a motion, right? So you get this left shoulder, what they would call the left shoulder, testing in this case, the support level, and then coming back up higher than your previous support, higher than your previous reaction, coming back down and retesting that support level, then coming back up again, theoretically at about the same level as your previous shoulder, and then coming down and breaking through to the downside on your support. The inverse to that, which we saw before the last rally, is where your price action is coming up, testing against resistance, coming back down, testing resistance again, coming back down, and then breaking through the resistance to the upside. So we're going to be looking at this pattern today. And then you've got bear, triangles, flags, pennants. They're all basically about the same. It's reaction of a price coming down, in this case on a bear flag, coming down into some pricing that would go in a kind of a small channel, basically into this wedge or pennant, if you will, because you can see we've got this kind of previous trading going on in here that would start the pull where we drop down and then trading in and break through to the bottom side. It's really a continuation of the down price action, the downward momentum. Little stall, could potentially even go up a little bit and then come down. The opposite of that would be a bull flag. If our price action was coming up and then we saw some trading in a channel or a pennant more like this one to the downside, then the continuation up of that price action. You could even say that this would be somewhat of a bull channel or flag here, and then again the price continues to move up. So those are the three different candle patterns that we're going to be looking at, and the reason that we're going to be looking at them is because they're all showing up on the Bitcoin chart today, and I want to take a look at them with you so that you can hopefully see those and identify them down the road for yourself. So let's take a look at the Bitcoin chart now today. Okay, so here we are on the Bitcoin USD 4-hour chart. Typically, we're looking at a 1 day or maybe a 12-hour chart, but I wanted to drill down the 4-hour chart just because it gives you a better idea of the pattern. There's more information in there, so it draws it out a little bit differently. So each one of these candles now represents 4 hours worth of trading. And if we take a look at this support line here in the blue and go back to our head and shoulders pattern, you can see we had this left shoulder here potentially where we came back and tested that support level here and then bounced off of it and came up into our head. That was our left shoulder over here. Our head is over here, came back down and retested it here. And theoretically, this would have been our right shoulder coming back up off of here, and hypothetically should have been in about that same area of height in the $6,700, $6,800 range. Now, when you're looking at charts, you want to look at just kind of generalities. You don't, it's not obviously drawing very symmetrical patterns, right? So just in general, you're looking at the pattern. And this would have been a very short shoulder right here, right? And it didn't get up to the level that we'd like it to see. It wasn't extended out enough to really become a shoulder in this pattern, in my mind. So let's go back to the cup and handle. So if we didn't have that head and shoulder form, do we have a cup and handle? We've got the test of that support level coming up into this basic cup, and then this trading range in here, which would theoretically be our handle. And you can see we had a recent break to the downside. Now, the final thing that we were looking at were flags and pennants, right? If you said this was a theoretical pennant here, right? We were coming down on our price action. We made a rise up, and then we continued to the downside. Or if you were to take all of this trading action in here as our pennant up until recently, with our highs kind of being, and I'll zoom in on that for you. Our highs basically being in here on a downward resistance area. Our supports basically being down in here. And then what's the action that happens from there? Theoretically, because we're on a downward trend coming into it, a breakout to the downside. All right, so now all of that is well and good, right? If we will all agree that this is a cup and handle that we've seen, then the next question from there would be, well, what does that mean from a price prediction standpoint? What does that mean from anticipating the next price move? Where are we going from here? Well, the theoretical is that you take the measurement from the head of the head and shoulders or from the cup and handle and go down to where that bottom is, that support level is that we were looking at for the shoulders and the head, or the cup and the handle. And if we use that at 26% as our movement potential for the downside and go from where that breakout was, then theoretically our price target or outlook, or where we're looking for Bitcoin to potentially go, would be in the $4,500 range. I know that's not pretty, but that's what the chart would tell us. Now, there's other indicators that we can use from a momentum standpoint, oscillators, some other things, but just purely off of the price action, purely off of the candle pattern, that would be the next logical point that I would be looking at. So theoretically, I would not be getting in the trade right now. I'm going to hold my money on the sidelines still until I look and see what happens from a support level at this point in time, right? That's where the price action's been reacting to, but we did have support back down here at this $5,700 level. So that's what I will look at right now, is to see what does price do and react. How does it react to the support level? Does it break through that? Because then that $4,500 looks pretty real at this point in time. And I'll also look at the price volume indicator and some other things. But at this point in time, just again, merely off the candles and the price action, I'm looking to see if we can hold here at the $5,700 range. If not, if we break through that, $4,500 looks pretty realistic in my mind, and that's what I'm going to wait for and see if I want to get in at that point. So one final thing for those people that say that TA doesn't work, if we look at the Fibonacci retracement tool, which is a mathematical equation that Fibonacci, a mathematician, put together that he saw as a pattern in nature, and it seems to work extremely well on the charts. Manipulation or not, if we just go from the low that we were at up to the high and draw this out, that mathematical equation, not based upon actual numbers and the prices and how much it moved and all that, just this range, then we can see how the prices reacted to that. And we had this movement up. We had this golden area, which is the 786.786, basically 78%, and the 0.618, basically 61%, as a golden zone for price reactions. Strong support and resistance areas in a chart. And you can see how the price reacted in that zone here. And again, yeah, it dipped below there, but then came back up. In this area here, we had a lot of action happen. We had some more action happen back here. We had some more action happen against this level. We had some more action happen in here. And so is that coincidence that that happens? Or is it truly that the charts play themselves out, that the manipulation happens at specific areas, that the bots react to specific areas? All of that can play into this. And that's, yes, the price is manipulated, but we can use that to our advantage because stuff like this still happens in the charts. So hopefully that helps you. It gives you a little bit more perspective on the charts and how to look at them and make your own decisions based upon what's going on. You're not just reacting to emotions, and you can make factual, data-based decisions from here to protect your investment, which is what it's all about, right? Hey, don't forget to subscribe. Hit that alert button so you know when these videos pop up. Follow us on Altcoin Buzz.io. We've got all kinds of great stuff coming out in the news, all the fundamental stuff that you want to know about. Make your comments below, and until next time, may all your trades be good ones.